Hello, good day, guys. My name is Nick, technical analyst with SuperForex. Today, we shall be looking at the technical analysis on the cryptocurrency pair, ETH, USD, and Ethereum. And we, of course, will be talking about fundamentals before we move right down to technicals, which is going to be what we'll be seeing on the chart. Now, lately, we have seen that the US lawmakers look to limit energy use of crypto mining firms. And in a letter sent to the Department of Energy and the Environmental Protection Agency, lawmakers demanded that crypto mining companies submit more reports on their activities. Lawmakers are concerned about the level of energy used by crypto miners and its impact on climate change. Now, in a letter sent on Friday, July 15th, a group of senators and representatives from the United States Democratic Party called on the Joe Biden administration to step in and limit the environmental impact of cryptocurrency mining. Now, the request arose in response to information offered to Congress by 7 of the largest crypto mining companies in the country in regards to the environmental impact of the cornerstone sector of the crypto industry. Now, the legislators asked the head of Environmental Protection Agency, EPA, Michael Regan, and Secretary of Department of Energy, Jennifer Graham, to install requirements for mining operations to submit more reports on their use of energy. And the proof of work problem, the letter signed by Massachusetts Senator Elizabeth Warren and Edward Miller, are also listed with Rhode Island lawmakers, Sheldon Whitehouse, Oregon lawmaker Jeff McAlee, California Representative Jared Hoffman, and Michigan's Rashida Tlaib. Now, this, of course, has under which miners create new cryptocurrencies such as Bitcoin and Ether. It's exclusive energy intensive, of course, and even to the point of matching the energy consumption needs of our entire populations. Now, what to notice from this, in late April, we have seen that the state of New York passed a bill banning of the use of new cryptocurrency mining equipment, except in the event that miners could prove that they were using 100% renewable energy, which the bill hasn't yet come onto that. Now, what to expect from the market? We have seen a huge hold down or breakdown from a most recent resistance zone at 1608.41. And now we are expecting a double head which showed a pattern, which of course has been showing signs of this. And the next most recent support, we have it at 1446.26 before most likely probably flush down to the 1257.07 zone and most likely a bounce up to the uptrend backwards. Now, if we were to make an entry from this trade and leave our stop loss at 1594.90 and let the trade run down to 1386.42, we are looking at nothing less than 1,600 plus pips from that trade, which of course is good money. And that's our technical analysis on today's cryptocurrency pair, Ethereum. And now we're moving down to the stock markets. Now down to the stock markets, we have noticed that Goldman Sachs warns it may slow hiring, cut expenses as deal slumps. And on Monday, it warned it may slow down hiring and cut much expenses as the economic outlook worsens after reporting a 48% slump in quarterly profit, which beat forecasts due to gains in fixed income and commodities trading. The US Federal Reserve interest rate hikes aimed at taming runaway inflation, having rattled global financial markets, curbing companies' appetite for deals and making them wary of stock and debt offerings. Goldman's investment banking revenue fell 41% to $2.14 billion in the second quarter, as fees from both equity and debt underwriting fell along with those from advising on stock listings and mergers and acquisitions. So given the challenging operating environment, we are closely re-examining all of our forward spending and investment plans to ensure the best use of our resources. Now, our Chief Financial Officer, Dennis Coleman, told analysts on an earnings call, specifically, we have made a decision to slow hiring velocity and reduce certain professional fees going forward. Though these actions will take some time to be reflected in on the results. Now, the bank will also reinstate its annual performance review for employees at the end of the year, a process it had indeed suspended during the period of the pandemic. And Goldman Sachs CEO David Solomon said the market environment has become more complicated due to a combination of macroeconomic conditions and geopolitics, citing the war in Ukraine. Now, despite the slump in deals, Goldman shares rose 3% as revenue at the global markets unit, which houses its trading desk jumped 32% to 6.47 billion, with fixed income, commodities, and trading revenue surging 55%, and equities revenue adding 11%. Now, what to expect from this on the markets? We most likely will see a drop down to the seemingly bullish run, and most likely a touch to this most recent support zone at 287.02, 144 pips away from that, and then before it most likely push up to a new zone at 309.83, which is about 84 pips from that. So what to expect from this real decline from this market? So we're looking at nothing less than 137 pips or more from this trade, which of course is good money. Now that's our technical analysis on today's commodity Goldman Sachs. I remain your host, Nick. Bye for now.